Welcome back. This is an update for the S&P 500, July 4th weekend, July 6th currently, and year to date, we went up quite a bit, or we actually hit 3,000 just before the holidays, and this is a daily chart of the S&P 500. We can look at the indices in general. Basically, May has been downtrend, sell in May, go away, and then right at June, buy, basically completely reversing May and then some. And that's been true for pretty much the Dow, almost the S&P 500, Nasdaq, and it's not true for the Russell, but basically almost all indices are in that same position. And so if we look in a little bit clearer, a little bit closer at the S&P 500, you can see we hit that 3,000 psychological mark and actually trended into that during the July 4th holiday and the fireworks overnight. And it wasn't until that Friday that we pulled back. But what happened was we pulled back and there was massive buying to completely reverse this drop. So what happened was the jobs number came out on 8:30 Friday morning, and that's what this was, and it was I guess the jobs were better than expected, and so people thought that the Fed might not ease and cut rates as expected, and so that reversed it. But with this level of buying, you can tell that is a sign of strong bullishness. Now on Sunday there could be some a little bit more of a pullback, but this here itself is very bullish, or at least that's what the pattern says. If it has trouble dropping and instead there's all these buyers that step in, then I would say we kind of consolidate and continue heading higher than 3,000 after some consolidation, and that's consistent with what I see in this chart pattern. So that's the S&P 500. The Nasdaq, or let's look at the Russell. I was saying that this kind of pocket area was a good entry point, and sure enough, it popped up, consolidated, and I expect the Russell, even though it was lagging compared to the other guys completely reversed May and then some, whereas the Russell has not. I think the Russell could be in a good position to potentially catch up. Still, the stronger indices are the S&P 500. The Nasdaq's recently not as strong as I was expecting, but still strong. In comparison, of course, to the Russell. So I think all indices this summer is just kind of winding up to be potentially a bullish summer, or at least a light drift upwards for July and August. This is not the time to be shorting. Last month in May was the time to be shorting, but if you didn't cover by now, you better start covering, because the momentum has certainly shifted to the upside. So that's the Nasdaq. There's also some interesting things. I'll look at this chart. So this is the S&P 500 futures, and you see that dip buy on July 5th. If we go over to cryptocurrencies, last time I was saying that 11,200 could be a good sell, and really what I was looking for was this kind of, if you zoom out, this kind of region right here, which is around the 12,000, low 12,000s to 13,500 ish, and it went higher than I expected, but sure enough, it did hit resistance and pull back below 10,000. So in a way, that's out of 14,000, it dropped down 4,000. That's quite a bit, but it is possible that drop is over. I would like to see a wave 2 drop, and so really it comes down to, if it does, it should happen by mid-July. If it doesn't, then it's just going to be coiling for something else. But ideal scenario is if it can pull back in a wave 2 somewhere here, and that would be a very good entry. I don't know if that's going to happen because this is not what I expected to happen. This dip buy from 9,700 all the way to 12,000, but that is what happened. So we're kind of right back to that 11,100, 200 area. So right now, let's see what happens. These are the two possibilities. If it does get here again, this would be a solid buy. And lastly, I just wanted to answer some questions about the Robinhood account. This is like just one of my personal accounts that I use, kind of triple ETFs. And it started out at $8,000 in I think end of 2016. I think it was around the Trump election time. And that $8,000, well, if you say, it basically went like up 40 to 45% during that time in the last almost 3 years. And I was able to get that 8,000 towards 16,000, so it doubled, but it took 3 years. When it went up 50%, I took a screenshot, and then when we hit up 100%, I took another screenshot, and that was roughly 2.5 to 3 years. And that 8,000, if I were to simply just put in the SPY, that 8,000 would be close to 12,000, but instead it's a little bit, it's just under 12,000. And so, I mean, of course, the S&P 500 has gone up a lot more than most people have thought, and actually this wiped out a big chunk of it here, but just immediately recovered. But just kind of pointing it out that the use of triple ETFs like UPRO, TNA, and TQQQ gives you some exposure, and you can also keep some cash lying around in case you see something else. But that's when the market is moving in a trending direction. That's a good opportunity to use these triple ETFs. They do have a time decay component, which is why it's generally not recommended for long-term holding. But if you do it in pieces at a time, as I have, then I think you can get some good juice out of it when there is a big move, such as just in 2019. Conversely, if it works against you, it can also work against you in a big way. So that's something to keep in mind. But given this kind of somewhat bullish structure, I'm generally in favor of these kind of triple ETFs in this kind of market environment. Obviously, there were times in 2015, 2016, where if you held it, it would have just kind of decayed on you over time. And that would have been better as a short-term vehicle for trading. But right now, we're just trending up. And the way I see it, if elections in 2020, Trump and monetary policy and a lot of policies are in place to make things look good before the election. So I believe we're gonna clear 3,000 and just keep chugging along towards that towards that 3,100 area. So we'll see if that happens. But that's my guess for the summer of July, August, and we'll see what happens after that. I'll take it from there. So that's it for now. I'll see you guys next time.